Good afternoon, everyone. I would like to welcome you together with my EBRD colleagues to our continued EBRD Agribusiness Talks, inspired by the future. So we are basically talking today about trends and opportunities in alternative protein. And I would like to send special thanks to our participants today and panelists, and I will be talking about them in a couple of minutes. Really appreciate it that you have made it. We all know that it's year-end rush, and it's probably a challenging time of the year for everyone. But thanks again. It's very important topic and very relevant as we see it. To put a little bit of the context. We all know that animal-based protein is at the essence of the food supply chain. We are consuming around 600 million metric tons of various animal source protein, be it eggs, dairy, meat, etc. And this is basically putting a strain, particularly with the population growth and even modest economic development, on sustainable supply. And we have seen in recent years and periods that alternative proteins are taking traction, particularly with the younger consumers, and basically the accelerated growth, nearly $30 billion of value of the market, and expected to grow much more than its traditional peers. Basically, if you look at it, kind of every second breed between 29 and 44 is now drinking alternative-based milk, and this is something that it's expected to continue, which is basically 30 billion is less than, put it in perspective, is around 2% of the traditional protein-based market, but the growth rates obviously, and our participants today, the panels will be telling us more about perspective of this market. Obviously, to prove to that, there is a strong investment activity. Just in 2020, there was around 3 billion just in the States in terms of the startup managing to accumulate in new investments in alternative-based proteins. And certainly partially was also driven by the environmental concerns, animal welfare, etc. However, just to reflect also, and I think that will be interesting also to hear from our panelists today, there are also some, as always, there is also other part of the coin and some challenges ahead. We've seen this year in the States sales flattening, or even maybe some say temporarily, some say it may not be temporarily. There is a price issue, there is a consumer readiness to pay for this premium, there is supply chain issue, availability of SKUs, environmental even challenges. Is it transparent enough about alternative protein emissions? Are we bombarded with too many alternatives, too many SKUs? What about taste and preferences, etc.? These are all the factors that are coming up. But I will stop here because there are people today who are very well equipped and rounded and actually protagonists of the sector who will be able to tell us more. Just for the few things on the housekeeping, the event is recorded. Certainly will be made available online after the event. I encourage all participants. The point is to have as much as interactive as possible. So Q&A session will be open throughout the webinar, and we are targeting to finish in 1 hour and 30 minutes. Without taking too much time, I would like to welcome Mr. Chirag Pandya, who is a partner at McKinsey Silicon Valley office. Welcome. Chirag has vast experience, more than 20 years in the consumer sector in a number of continents. And certainly is a great interlocutor to tune us into today's topic with the presentation. And Chirag, again, welcome, and the floor is yours. Thank you.
you very much. And I was a Londoner until very recently, so I have my roots in the European grounds. Uh, if we can switch to the presentation, thank you. So I just want to cover a few uh, overarching themes within the alternative protein world, right? Starting with the definition, just to set the ground rules, and then obviously we can open it up for questions and answers. So when you look at plant overall alternative protein market, right, as Miljan also started sharing, it's currently around $4 to $5 billion market and growing much faster than the traditional meat substitutes overall as well. But within the market, there are three major sources, right? You look at plant-based sources, so this is where you see the peas, the soy. If you look at the milk, the oat, the almonds, etc., right? These are plant-based sources, majority of which are commercialized. Probably most of the market still belongs in this, right? So as you see, places like Beyond Meat, Live Kindly, Impossible, Nestle, Unilever entering at commercial scale and across geographies. You also have emerging technology. Well, I should probably not call corn an emerging technology. It's probably been here much longer than any of the other names on the page here. But essentially deriving protein through fermentation route, right? Either through live microorganisms or through mycoprotein route, right? You also see specialized ingredient companies like Clara Foods, Perfect Day, etc., also emerging, which is not necessarily from the plant route, but from the genetics route or biotechnology route, right? Trying to create a mimic of an animal-based product in case of Perfect Day, like whey proteins, for example. And then you have the most emerging part of the ecosystem, which is the cell-based, right? Lab-grown meat. As you could see, certain countries like Qatar, Singapore have already, and Israel have already taken regulatory approaches which are close to kind of commercializing this. But when you look at it at a global scale, there are players still building the pilot plants, looking at this with analysts believing anywhere between 2025 to 2030 as the phase for commercialization. If we move to the next slide, please. As mentioned earlier, right, the alternative protein world is typically evaluated over the 5 key attributes, right? What are people looking for, or what brings this more into prominence, right? You could ask this from multiple different angles of questions. And it boils down to almost these 5 challenges, right? Or the 5 proofs that you need to kind of go through. First and foremost, right? Nutritional value. Is this, how comparable is this protein to nutrition? Am I making a substantially lower nutrition choice by switching to an alternative protein? What is the functionality? I think one of the 2 largest hindering point right now, right, are the taste and the texture. And there are multiple startups not only working on the end product, but also at the front end in trying to solve the taste or the texture questions that the industry faces right now. Of course, there's a question of cost, right? Oatly sells at probably 2x, if not 3x price of the cow milk in the UK market, last I remember. And that is a massive delta, right? And then obviously everyone's expecting it to go through the semiconductor route as the scale brings the cost down. And obviously will increase the affordability there. Consumer acceptance is a wider array than just the functionality of nutrition value. This is where the intolerances, the sustainability angle from the point of view of carbon emission, the higher amount of allergens, and plant-based foods having less allergens, right, are all playing into key consideration of why people again switch to an alternative and stay within the alternative protein world. And whilst all of this is bubbling up, as a lot more of you might have seen, supply chain and availability, as well as the manufacturing capability, is becoming the key to the not only the growth but also the sustaining of the the market. And especially, I think somebody already mentioned, right, Beyond and Oatly and some of the other players already reporting flattening of the revenue. A lot of that flattening is because they cannot make things fast enough in line with the growth, right? So there comes a plateau where the next plant comes in, and then you make that leap of faith again. But overall, these are the 5 things that you need to get right and understand and get right from an alternative protein perspective. If you look at from a consumer perspective, which is the next slide, right? Most people move to alternative protein, and we've done this very extensive research through digital diaries, including people recording their emotions and other behavioral things whilst they switch or whilst they make a decision in the supermarket all the way to the consumption, right? Some of the biggest driver that allows people to switch or inspires people to switch, health comes predominantly at the top, followed by animal welfare and environment. There are regional nuances. It's not on this page, but when you look at how the choice is made in, let's say, Eastern Europe versus Western Europe, right? The reasons are very different. Even within Europe, when you look at UK versus Germany, the reasons are different, right? But it always is within the health, animal welfare, environment as the top 3 bucket, right? When you look at types of like who comes into the traditional meat eater versus vegetarian, I think there's an inherent sample bias, but vegetarians tend to come into it a lot more from an animal welfare perspective than meat eaters who come into it from a health perspective, right? It is very important as you starting up or building a brand or even scaling up, right, to understand in your key market for your consumers, right, what is the thing that really compels the traditional eaters into an alternative protein world, because that is going to be key to your product design or key to your platform of that product design if you are having a multi-country aspiration in your product development. If you go on to the next slide or so, we now switch to where is this market currently, right? And I see a very attractive side, especially for Europe, right? Where if you look at the US and Europe currently accounting for 85%, but if you go to the next slide, right, even within Europe, currently a lot of these is towards the Western Europe. I mean, if you take UK, France, Italy, Netherlands, and Germany, that is predominantly 3/4 to 80% of the current sales. That provides an enormous opportunity to the Eastern Bloc, to everything that is emerging, right, including some of the southern parts like Spain, Portugal, to really develop, right, or take a higher market share of the traditional animal-based product. And the good thing about that is that there are precedences now in the US market who started a lot of this movement, but also in some of the Western European market, so that you don't have to reinvent the wheel in the consumer side of things. You don't have to create the need spaces. You don't have to create some of the what really works for my consumer understanding, which the Beyonds and the Oatlys and the Impossibles of this world have to painfully go through. If we move on to the next one, and sorry, I'm rushing through because I want to just set the scene quickly before we go into the discussion. What would drive the growth, right? Going forward, what would really change the outlook of from where we are to the next horizon, right? And there are 3 elements to that. There is a consumer element, probably one of the most important one. Then there is a supply element, right? Are there enough of these type are going to be available? And then finally, regulatory shifts, especially when it comes to cultured meat, labeling regulation, scrutiny over carbon emission, right? Where does and including as the lobbying is currently very strong, at least in markets like US and UK, right? Putting some sort of tax on the animal-based product to bring the price parity up on the traditional products as well, and then true cost of food. But overall, what you see is from a consumer side of things is the overall eating experience, right? How close to it is in terms of the mimicking the experience of having an animal product. what is the actual health consciousness, right? Because flexitarians come to it, right? What is the health claims that is there any trade-offs that they have to make when they come to the alternate world from the animal-based food world? What are the sustainability criteria? Can it be measured, right? Can it be demonstrated? The consumers are becoming more and more scrutinizing before they make this choice, and not from marketing claims, but from real demonstrated data as the world increasingly turns more and more digital and analytic, right? The consumers are also demanding proof of concept rather than a statement saying I'm more sustainable, right? At the same time, price, which is the key driver, I think also plays a big role from a supply side of things. And that will come through not only the reduction in price by the innovation and the effectiveness of scale, but also greater R&D, which will help in substantiating the product, probably reducing the number of counts of ingredients, as well as improved accessibility, right? Here, but there might be a point where there is not enough pea in the world, as you could see in 2022, right? And you really need to ramp up your pea protein isolation production process to try and get to that level so that the beyond and the impossibles of this world can still keep growing at the growth rate that they've had historically. If we move quickly to the next one, which essentially, so what does this look like into where the world will end, right? And as analysts will always have it, we would hedge our bets. But if you look at the spread of where the 2030 retail market in terms of dollars of billions could end in the meat alternative. So this is just meat, right? This does not account for the dairy. This is just purely focusing on the meat side of the things. And you can see that even in the lower case, right? The low case, it is still a significant market that is coming closer to around $50 billion, right? So it's still 10x what it is right now over the next 10 years. But if you look at the bull case, right, on the high end now, that needs to go through the enablement of the key enablement there really is the government also starting to levy some taxes on the animal-based proteins, right? Cultivated meat becoming a lot more mainstream, as well as the nutritional and organoleptic qualities being more at par. If all of those things happen, right, the bull case scenario is that as much as half of the traditional meat market can be switched to, or people would switch to alternative meats, right? And so that's the high case scenario you see in here. And then on the right hand side of out of the 6 or 7 enablers that I was talking about on the previous page, you see what needs to be true in order for you to, or what you need to believe in order for you to believe the size of the market will be between low, medium, and high, right? Personally, I think there is a lot of momentum right now going in, and I would really root for the world to move towards the high scenario, not only because it's good for the disruption and the other thing, but it also is a lot more sustainable way of really producing and consuming food, which is one of the key carbon emitters, as well as one of the key contributor for longevity and aging and healthy aging side of the things as well. So it really solves a couple of big outstanding issues in the modern world in that sense. We will go to the next slide very quickly, and then I think we'll probably we've gone through the enablers, so probably the one further down. So what are the challenges remaining, right? Of course, there are a few. The nutritional perception, ability to innovate, availability, policies, but the most important one that a lot of people are really focusing on is reducing price, right? Price parity is probably, or lack of price parity rather, is probably the single largest inhibiting factor right now in the alternative protein world, where there's a lot higher willingness, and I think as Miljan also mentioned, right? Gen Z, millennials, half of them are willing to switch, but then there is a significant portion who is unable to do so because the price delta between an animal alternative and a plant-based alternative is currently quite high, right? So the faster, either through technology like fermentation and bioreactors and others that the cultured meat phenomena are working for, or the agri-revolution that would need it in terms of the soy pea and other ingredients, the better will be the lower will be the cost and the better will be the adoption in the overall. Let me take a stop in here and probably open it up for the other participants in the panelists.
Miljan, you're muted. Hello, sorry, I was muted. Thank you, Chirag, for the presentation. It was very insightful. I think it gives us enough, to digest both with you and the panelists with us today. Once more, I would like to welcome Allyson, who is the president of the Global Plant and Alternative Proteins at ADM. Allyson, welcome. I don't think so. I need to introduce ADM, but still, for the people maybe who are not from the industry, ADM is a global agribusiness company that serves customers across the value chain, from origination of the crop, its processing, and specialty services. And by the way, ADM has made public recent investments in our region, and we are very happy about that. Andrew, Eve, I don't know, Vasil, do we have Andrew on the line? In any case, we are hopeful that Andrew will join us.
That's right.
As a founder and managing general partner at Big Idea Ventures. He's now leading the first fund, the New Protein Fund, focused on investing in the founders who are basically going into this business. And we just mentioned that in 2020, just in the States, around $3 billion was accumulated by the new startups. So obviously a huge investment interest, but we will hear from the basically people who are really investing into this business. Again, I would like to welcome Igor Sadurski as well, who is a co-founder of Bezmiesny in plenty reasons. Igor, I hope I'm pronouncing it right. Is basically alternative protein meat company based in Poland, so certainly in one of our largest countries of operations. And basically, Igor can probably be able to tell us, more from the field experience. So I would actually like to start with Igor, who has first-hand experience. So maybe Igor, following up on Chirag told us, and who is also participating on the panel, can you just give us a little bit of color about your story? What was rationale for you to enter, and your experiences so far?
Okay. Thank you, Miljan. Thank you for having me. I'm very proud that I can speak among so great speakers. As you said, I'm one of the CEOs of Bezmiesny. It's a Polish startup in the field of alternative food, alternative meat proteins, based in Warsaw. We started in 2016. We started our adventure in meat alternatives from crowdfunding campaign. It was our way to find out if Polish market is ready for this type of products. As you can see, I'm sitting here five years later, so it was ready. We received support from almost 2,000 customers, 2,000 supporters. We raised $40,000, and we invested it into the start of Bezmiesny. At the time, Bezmiesny was the second producer on the market, on the Polish market, but the first one with an approach of a startup. It was a perfect timing to start in this field, in this area of the market, because at that time in Poland we faced the outbreak of vegan businesses, like restaurants, like producing businesses, like beauty businesses. So we find our niche at the best time. And since that, we achieved two main things. We expanded our portfolio of products from 3 SKUs to almost 25. And of course, we raised availability on the Polish market. Bezmiesny is now available in the biggest chains in Poland, in the biggest retail chains in Poland, as Carrefour, as Kaufland, as Auchan. So for a small company, comparing, for example, to the meat companies, it's a huge step. And this year, we started our second business. It's called Plenty Reasons. It is a export company, export sister of Bezmiesny. And right now we are exporting our products to UK, to Hungary, to Slovenia, to Lithuania. So more or less the Central and East Europe.
Thank you, Igor. Really well done. So, what I hear from relatively small investment, which you managed even to move your portfolio of the products from 3 to 20, and now even kind of trying to embark on the export, not only in the Polish market. And we know that entering key accounts, big boys that you have just mentioned, is never easy. How did you manage to craft products that, with a little investment and manage to get all those people on your side?
Yeah, we started, like I said, we started in a perfect moment because at that time we didn't have so many competitors as we do nowadays. So we had a lot of time to craft our products, to make them taste good, to make the texture, characteristics well. So yeah, we had a lot of time to develop our products. But from the first day of Bezmiesny, we wanted to find our own way into this market. Because, like you said, and I said before, there are a lot of competitors right now. So we wanted to find the way that we could differ our products, our brand from the competitors. And we focused on Polish specialties like bacon, cold cuts, sausages, dry sausages. So the products that they are offered widely on the meat market, like normal traditional meat market, but they are not on the alternative meat market. The other thing is right now the market and the customers are very demanding. They're looking for quality products. They're looking for products that can have a story, that can have something, not only the product, but something more. So this is the Bezmiesny story. Me and my partners are very close to the brand, very close to the product, and we have a very strong brand in Poland, and we are trying to do the same in export.
Thank you, Igor. Thanks a lot for intervention. Allyson, welcome again. From a small, let's say, startup Polish company to big giant, reverting to ADM, who has probably penetrated this segment very proactively. And 30 years ago, you made the first vege burger, if I'm not mistaken. I was lucky as well to visit your headquarters just before COVID. It was like October, November 2019, and got more familiar, particularly when you started expanding your operations in Eastern Europe. So Allyson, maybe it would be also interesting for us to discover from really large global international business like yourself, how you as an ADM entered the alternative protein segment, and what do you currently do in this sector?
Sure, Miljan. Thanks very much for the question. And Igor, very impressive to see the great work that you've been able to do in Poland. So we need more of you out there in the marketplace. At ADM, we believe that food is fundamental. It is our most basic need. It also sustains and fulfills us and promotes our well-being. And that's why we really focus on unlocking the power of nature to bring quality of life or better quality of life to all of those across the world. So we started as a linseed processor about 120 years ago in Minnesota, right? So we have a very long history of being in this agriculture space. And today, of course, we are 800 facilities, we have 40,000 colleagues across the globe, and we're across 200 countries. But if you think about what we do and what is unique to ADM is that we really play across the entire food and agriculture value chain, right? We play from farm to fork. And I think that makes us quite unique in the industry, and also gives us a unique differentiation and ability to bring the consumer needs, the market needs, all the way back to the farm and everywhere in between. Now, referring back to your question, Miljan, specifically around all protein. Yes, we were one of the first veggie burger sites in the 90s, and it was actually called veggie, not plant-based, right? So it was many years ago, and very different language and nomenclature, and also a very different target audience, right? We were targeting the vegetarians of the world, not the flexitarians of the world. And I think it's important to highlight that is a huge shift in the marketplace. That today we're not, I'm actually a vegetarian. I don't eat meat, and I haven't for 20 years. But I'm not the target audience of today's plant-based market. So, it's interesting to see the shift. But that being said, we were actually in the market even 30 years prior, right? When we were making the first textured vegetable protein in the 60s. And I have to admit, when we started in the early 60s, we were just kind of expanding off of our soy processing capability around soy meal and oil that was going into feed markets. And really, we're looking to how do we move into the human nutrition side of things. This was really something we discovered and thought, wow, this must have some great application capability and there must be a high demand for this. But I have to say the first number of years, nobody was interested, right? It was this new concept. There was no demand. People were not interested in vegetable protein. They wanted their meat, and that was what they were expecting. And so our early successes actually started to advance in U.S. school lunch programs, right? Where they were looking to extend nutrition and bring more affordable nutrition to a broader audience, as the U.S. government started to provide food in different capacities. So needless to say, here we are 70 years later. We are probably one of the leading protein nutrition suppliers today in the market. We have a robust protein portfolio of soy and wheat and pea and chickpea, and we're continuing to expand and diversify across both plant proteins, but also into some of the areas in new technologies, as was covered earlier on in the presentation, and really investing for that future of growth. So as you think about what do we bring to the table today versus what we brought in the beginning, I think we focused on innovation to start, and we continue to focus on innovation today as we look to how do we leverage our deep nutritional know-how, our deep processing technology to continue to adapt and grow with the growing change of the consumers, right? We have a history rooted in what I would call more culinary, maybe even meat extension type applications. Today, we are growing rapidly in the meat alternative space, in the specialized nutrition area, as well as in the dairy alternative space. And I think that this is just the beginning of where these opportunities are going to arise. I also just comment that we have a very broad pantry at ADM, right? We're not just a protein supplier. We're not just an agriculture supplier. We have a broad pantry of flavors and texturants. We have a health and wellness portfolio with growing probiotics, postbiotics, fibers, antioxidants. And so if you take that pantry and combine it with our protein and our deep formulation capability, I think we're in a really unique position to not only be the leading ingredient supplier, but also help connect all the ingredients. And how do you create the right systems? How do you create the right turnkey solutions? How do you create 1 + 1 = 3 when you're focused on taste and nutrition, health, sustainability, all of these consumer drivers right now that are really helping to fuel this industry. So I think ADM has evolved immensely over the last 70 years, but I think we're continuing to be in a strong position to help fuel the growth, but also to work collaboratively across the value chain to help solve and unlock some of the challenges that we're seeing around supply chain, around cost, around taste and texture, which continue to be a challenge, but also around diversification. So I think on top of that, we have a pretty robust sustainability strategy and commitment. And so I think we're aligned with those consumer value drivers and really looking to how do we continue to work with the farmers to improve their farming practices? How do we optimize the end product around nutrition, around clean label, around minimally processed. And again, this comes back to innovation, focus, and
Thank you, Allyson. Indeed, ADM was and obviously remains a trendsetter and one of the key drivers on this market. But you mentioned quite a lot, from product innovation, supply chain, working closely with farming community, but also all other stakeholders on the market. There are still a lot of efficiency to be made. Plus consumers, etc. And coming back to Chirag, obviously one of the considerations he was mentioning was will alternative proteins manage to reduce the price, maybe not at the parity to traditionals, but this is probably a question from both Chirag, maybe also for you, Allyson, how you see it from the industry perspective, and Chirag, you from the being in the practice that oversees everything, like what is happening in the sector most recently. To me, this is obviously one of the key unlocking points, particularly in the emerging markets, where, for instance, Igor is mainly focusing. He was mentioning Slovenia, Hungary, and other Central Eastern European markets. But when we looked at the slide, with UK consuming almost half what is in Europe consumed at the moment, because one of the reasons is obviously not only acceptance, but is also affordability. So can you both, Chirag and you, Allyson, reflect from your point of view? Will you guys manage to be attractive enough without too much of intervention on regulatory? Because Chirag was mentioning also, maybe it's going to be taxed. But can you make efficiency and scalability without taxing to make a level playing field for alternative proteins versus traditional?
I can start maybe. So
perfect.
Please go, Chirag.
From what I've seen, right, on both sides, and there are, and I know US and Europe takes a lot of airtime, but there are a lot of Asian country examples where I think the key to winning this market, where without the regulatory intervention, right, is really creating a product that fulfills the need space. Right now, that need space, and hence it might be very important to understand what works in Hungary versus Slovakia versus Poland, right? In that sense, in terms of what is the end product important, right? The format and the type, etc. But importantly enough is why would somebody switch to that end product? So essentially, is it the health reason? If it's the health reason, is it because of the too much consumption of whatever fat, carbs, etc., right? So that you can then account for it in your product development, and you could have your value proposition around that. What I've seen is that successful companies have really understood my early adapters in the market. Why would they move, right? And I see the whole block on the Eastern Europe still in that early adoption phase. Potentially, maybe also because of the price, but time and again, we've seen in the US, also in the European markets, right, where we create that very clear and crisp need state for the consumers, the willingness to switch is higher. Of course, as this is happening, and I think Allyson also mentioned this, right, a whole partner ecosystem is kind of also forming. So don't try to do this alone, right? I would not say, look, I'm going to solve the texture challenge, the nutrition challenge, as well as making this most effectively. Pick a part of the value chain that you believe you are more specialized at. It could be the taste. It could be, I want to be the contract manufacturer with the biggest scale, right? And I would let other people innovate, but I can convert that innovation into a scale of a consumer business at the most attractive cost base. And I can see a real emergence of an alternative protein ecosystem that would overall also help significantly reduce the price, right? But whilst doing that, combining all of the innovations that is happening on the texture side, on the ingredient side, on the taste side, on the product format, on the delivery, like chilled versus frozen, all of those things, right? So the faster you create that ecosystem, the quicker you go on to, okay, this is what my role within the ecosystem, right? And the more you do that within the context of what do consumers in this particular market want from me, the faster you will switch. Of course, if there is regulatory intervention in the process, it will even expedite. But irrespective of the regulatory intervention, I think there's a lot of momentum in the market at the moment.
Thank you, Chirag. for interaction. Allyson, do you want to add something?
Yeah, I mean, I think I'll focus a little bit on the affordability side. Specifically, I think we're in a very unique time, right? This year in particular, in terms of availability of raw material, availability of labor, of even raw material to build expanded facilities. I mean, we're in a very unusual time in the global economy, right? In terms of constraints on supplies. Number two, there's this inflationary component that's happening across the globe as well, which has taken not only, you have this pressure on price because of supply demand constraints, but now you have this additional inflation that's happening. And so I think affordability is a very difficult topic this year, but it's also top of mind for everyone because things just got a lot less affordable. That being said, we are, as ADM at least, we are committed and we know that affordability is key to driving and continuing to enable this industry to grow. And so some of the ways that we're trying to tackle that and address that is one, the first one is availability. So how do you unlock availability? You have to look at diversification, right? Because we have raw material constraints. And so we need to think about what are the different plant proteins that we can bring in, that we can still provide that nutritional profile, that taste profile, and even how do we blend the different proteins so that we can continue to unlock additional volume or extend some of that functionality of volume that we do have available today in different areas. The other way to do that is also to really go deep with our customers on their applications and understand what are you trying to achieve in these products? How do we help you get there? It may not be the same solution you traditionally think you might need. You may not need an isolate at 90% premium protein. Maybe you only need a concentrate with high functionality. So how do we, get our customers to also try new recipes, try new menus, but work closely together on formulation because we have that knowledge. They have what their customers need, and together we can start to, again, continue to unlock what is available, which will then relieve some of the price pressure on some things in the market. Another area we're really looking at is how do we reduce the processing, right? Look at minimally processed, which will then, of course, bring down the cost as well, but also speed our ability to bring more to market because unfortunately, as we look to expand our own capacity, it's a pretty expensive endeavor and it's a pretty time-consuming endeavor with today's supply chain. So how do we look to, find ways to cut corners, but not in a good way, right? In a positive way, more sustainable, more nutritious way that again meets the consumer needs and brings products to market quickly at the right price. And then the last one is scale. So as we think about next generation technology, I think so many of them have the potential to really help us drive the price parity target and achieve it quickly, but scale is going to be essential. And there's a lot of fermentation assets that are going to be needed. There's a lot of, again, back to this collaboration and ecosystem development. We cannot do this alone, and we need to startup community, old legacy community, everyone throughout the value chain. We need to come together and think through these challenges collectively, because only then I think will we overcome them and get them to be able to be readily available to the emerging markets where there is still so much to achieve and still so much to offer. Because as you mentioned, the UK is still driving a lot of the growth in the European market. But we, as you mentioned already, we see great potential in the region, having made the purchase at Soya Serbia. And we're excited to get to learn more and to get to be more intimate with the market to start thinking about how we can address the needs.
Thank you, Allyson. I will come back to that.
Of course.
Investment and availability. I think you covered really well. It's really complex. It requires time. It's a process. It's not like one-off, obviously, destination, but indeed there are a lot of challenges, but certainly potential is tremendous. And I think this equation and balancing act of all these that you have just mentioned in order to make this affordability is going to be one of the key, probably, success factors. Andrew is with us. Andrew, welcome. We just got worried, but thanks for making it. I know it's a busy time of the year. Actually, Andrew, you are an excellent complementary to the excellent speakers we have from the industry, founders in the business, from consulting stage, etc. So with the big players, Allyson was just presenting what ADM was doing. But Andrew, you being in Big Idea Ventures, obviously supporting the startups in alternative proteins, and we've seen that obviously it's a new niche, growing, etc. But more recently, we also saw some headwinds. on the price, on performance, on including in the state. So it's obvious, it's never black and white. It's probably gray as weather today in London. So obviously some more well-established segments like milk, vegetable milk, etc. It's clear, and sort of we all know when IPO happened with sorry, with Oatly and Beyond Meat. But basically, some of the recent performance obviously have not been, playing maybe that well as expected, slowing down. When some people say it's temporary, like Kellogg's CEO thinking that this is temporary, etc. You are the right person, and from your as an investor's perspective, what do you think? Is this something for the investors to worry or continue pumping up?
Yeah, that's a great question. I think Chirag, Allyson, and Igor would all agree that this is, when you have a growing, especially a quickly growing market as we do, where so many different forces are sort of coming together to deliver on lots of different opportunities. The growth curve is never going to be, always constant, always in a sort of a 70-degree or whatever, never at a dramatically hockey stick, consistently hockey stick growth. From our point of view, and this comes back to a number of things that I was hearing Allyson say, I'm seeing some of these performance challenges that you mentioned being driven by supply chain, by scalability, by the availability of the product in the marketplace. We have a infrastructural immaturity in the marketplace from a production perspective. I've had so many conversations with startups, but I've also had similar conversations with global food companies who are all from the smallest to the largest finding it difficult to get capacity right now for production. It's a combination of ingredients, but actually I think it's more of a focus, and I'd love to hear Allyson's point of view on this. I think it's actually more of an infrastructural / production capability than it is ingredient, because the consumer is demanding ever better product, ever more nutritious, simpler products with far fewer ingredients and ingredients that people would recognize. They're becoming more demanding of the products that they consume, rightly so. And when I talk to the large global food companies, they're saying, we cannot find contract manufacturers that can deliver the volume we need to be able to provide our product to consumers, right? So a lot of, I'm getting some bandwidth issues. Hopefully I can still be heard.
You're back now.
Please raise your hand, nod, and okay. Yeah, so I'm seeing some of the challenges not being, a change in demand by any means. It's actually more of a change in our ability to produce in the kind of quantities consistently that's necessary, because, we're dealing with technologies which weren't necessarily being deployed 10, 15 years ago. This is a new category, and there's going to be growing pains along the way. And I think we should expect them and do what we can to resolve them, but they're still going to happen.
Thank you, Andrew. So certainly it's not like a lack of capital, but as you said, so.
No, I mean, there's a significant amount of capital, almost too much, which is causing, companies to get ahead of themselves from a valuation perspective. We talk about, companies being ahead of their skis and about to fall over. We're seeing companies that are, X number of months old that seem to think they're a $25 million business already, which just sort of, I struggle with that just a little bit. So no, the funds are there. And interestingly, we get about 500 companies every 6 months, and that's growing very, very quickly. And those companies across cell-based, fermentation-enabled, and plant-based, all of the categories. Interestingly, plant-based is probably less now. So I think we're seeing a lot more innovation coming through in the precision fermentation enabled space in particular. Incredibly exciting in the meat, dairy and seafood space across precision fermentation. Cell-based is great. In terms of cell-based, by the way, it's a lot of the blockers now. So two years ago, we were focused on cell lines and fish and turkeys and all the different things we could manufacture from a cell perspective. Now we've got companies who are really diving into the economic and scale blockers of that industry. And I just hope the regulatory environment eventually catches up with where we're going with that category.
Thank you, Andre. Thanks a lot for this insightful, initial intervention. Very much appreciated. Switching to Igor. Igor, you are in emerging markets, and we saw from the issues on consumer, on price affordability, but then more importantly on logistics, scalability, technologies. Certainly not lack of capital. But you are in emerging markets, and do you see how you're gonna if these guys, in the States and in the more developed markets are having these challenges and still persistently, Allyson was, we're talking about in technology, supply issues, people, COVID-19 is still around us, and it keeps like, infinity. It's here, and who knows how it's gonna affect the entire supply chain. From your point of view, how are you embracing yourself? How you think you're gonna manage those emerging markets, which are certainly even more volatile, even more prone to those risks of there is labor shortages, there is investors are asking for higher returns. So all the challenges I think are multiplied. Maybe from your experience, okay, Andrew is disagreeing. I like that. But maybe from Igor, because you are in Poland and you are sending now. You just started sending your products to Hungary. How do you see it, from your perspective?
Yes, of course, you cannot compare Polish market or Central European market, for example, to the UK, right? Because it's smaller, it's not that developed. But Polish alternative meat and alternative proteins market, it grows very, very fast. Over the last 5 years has increased, I think, 5-fold. Biggest Polish retailers has their own brands, but they has a lot of brands right now. I think more than 20 SKUs on the shelf. So Polish customers are looking for this type of products. Poland is a very unique country. We like innovations. So we can agree that the meat alternatives are innovations. In Poland, eating habits are changing. At the beginning of our adventure in this market, mainly our customers were vegans and vegetarians. Right now, our surveys shows that 80-85% are flexitarians. So this is a huge shift from the beginning. So the customers are different. The customers are more demanding. They are demanding, as you said before, reduced prices. They demand better quality of products. So in Bezmiesny, we are focusing on our R&D. We are focusing on our products. We are developing constantly our products to be better, to be more affordable in the means of price, but in the means of also in means of proteins. At the beginning, we produced our products from wheat protein, but right now we are shifting to pea protein. We had our small adventure with even with lupin. It's the protein from the plant from Poland, but it's not very good. So so we abort this idea. But yeah, so Polish market, emerging markets, I think they will be on the rise in the nearest future. Right now, the whole alternative protein market in Poland is estimated at 600 million of zloty. So it's 150 million of euro, let's say. But in the nearest future, it will be still on the rise.
Thank you, Igor. Allyson, you mentioned your recent investments in soya protein, and we see different views on soya. It was probably one of the first when people started entering and tasting those alternative-based products. You, by acquisition of soya protein, it happened to be a prior EBRD client, is one of the largest non-GMO soya producers in certainly Serbia, but wider Southeast Europe. So congratulations on closing it. But also Chirag prompted a little bit sort of demand for soya is decreasing, pea is increasing, so or they're both going up, different health perceptions, consumer perceptions. So maybe just to give it from your point of view, why you believe still in soya, I guess certainly by doing this acquisition, and do you see some different opportunities, kind of your rationale in investing further in that segment?
Absolutely. I mean, soy is one of our core offerings today, right? And the reason it's critical to the market is that, to be honest, it's the cleanest flavor plant protein. It's greatest functionality plant protein. It's the easiest to use across many different applications, and it's at the right price. So I feel in the near term, we're not going to see any reductions in soy. And to be honest, we've been growing high teens, low 20%, double digits the last couple of years in demand for soy protein. So no, I'm not seeing a shift here at all. I'm merely seeing a rapidly expanding industry that's looking for options and looking for solutions, right? So whether it's soy or it's whatever else, I think there's enough room for all of it, and we need to be investing in all of it, not just from a customer perspective and consumer perspective, but also from a sustainability perspective, right? Because we don't want to just focus on soy if we're thinking about broader biodiversity and ecosystem protection. Like, we need to also be diversifying and thinking broadly about the long-term and midterm demand that we're trying to meet. But again, I'll just reiterate, we believe that there's enough room for everything, and we need to invest to just bring more options to the market to continue to help fuel the growing industry. But back to the soya protein piece, not only are we seeing a rapidly increasing demand for textured soy protein in particular, high protein concentrate textured protein is still rapidly expanding with the focus on meat alternatives, right? And to the extent that many people are exploring new technologies, whether that's high moisture extrusion in addition to the dry extrusion approach, but we're really looking at different ways of bringing that protein to life to create new formats, new textures, and really thinking about different ways of expanding beyond the traditional burger and sausage that's currently out in the marketplace. And I'll kind of bring this back to then Andrew's comment around co-manufacturing. This is where that challenge really comes into place, right? Because the raw material is one challenge this year in particular, but we're investing to expand that. But then the next one is, how do we get it into the preferred format from a consumer perspective? And that's where a huge piece of that bottleneck is, and we're feeling that globally as well. And as you mentioned, Andrew, small and large companies are saying the same thing. So it's definitely an area where there needs to be some investment and some unlock, and probably some efficiencies and improvements as well as we think about bringing new technology to product format, et cetera. Again, sorry, I keep going away from soya protein, but like I said, we see high growth in soy still. We see significant growth in texture protein. We were getting an increasing demand for locally sourced non-GM protein from a lot of our European customers. And so for us, really expanding into Southern Europe with soya protein allows us to feed that market and to be able to meet that increasing demand. And we see, great relationships there on the ground with the local farmers, and great opportunity for expansion. whether it's through soy or through even other raw materials. As we look at, there's a huge rapeseed market there. There's sunflower nearby in the neighboring markets. There's definitely an opportunity to expand and diversify in the region. And I think soy protein was a good step for us to building our own global, local capability, but also meeting that increasing demand from a customer and consumer perspective.
Excellent, Allyson. Thanks a lot. Music to our ears. If you need a partner for all those investments, we are steady, standing ready to support it. That region is obviously one of the core regions for the bank, as you know, and we have a lot of investments with the farmers, but also we used to have, for instance, in processing like soy protein. Joking aside, certainly that Andrew, from the fund perspective point of view, I think probably for the people here, I'm sure we have on participants, I can't see the structure, but there are a lot of people from the finance industry as well, starting with me and my colleagues. And what we would like to do is to hear, from the first hand from, sometimes private equity funds, venture funds, what is happening, what you guys are doing. And this is a new field for us. Maybe one day we will co-invest together or look at for the joint opportunities. Maybe from your point of view, just short summary, what really big ventures are doing, how do you see your impact on how you are choosing your investments, and if you have one kind of turn the page, jumping from the page story to share with the wider audience would be very much appreciated.
Absolutely. Thanks for asking the question. So we are global. We have an office and offices in Asia, in North America, also Europe. So we're seeing deal flow from a plant-based, cell-based, fermentation-enabled perspective on a daily basis. I'm literally getting emails, probably 3 or 4 a day, from companies looking for investment of various sizes. So I think it's a mistake to think that this whole community is very much just startups. It absolutely is not. We've got companies of all different sizes getting very engaged in this category. One thing I think that's particularly interesting about the alternative protein space is the real multiplier, in my opinion, is bringing the sort of creativity and innovation of these young companies together with the maturity, the scalability, and the knowledge and the experience of companies like ADM, Givaudan, Beulah, etc. Bringing this sort of spark from these companies that didn't exist 2 years ago, 3 years ago, 5 years ago, together with this sort of more traditional companies that really do know how to bring distribution and scale to play. I think that's where the magic is really happening. And thankfully, the consumers are even further ahead of the curve than us in the food industry are. The consumers are looking for better products, more products. Allyson made the point that we need to get beyond, burgers and sausages. In the US, they only eat burgers and sausages, let's face it. No, I'm just kidding. I'm just kidding. But, we're investing in alternative protein companies in China, in Malaysia, in Indonesia, in the Philippines, in Singapore, in Chile, in Argentina. We've been investing in Eastern Europe. So we are seeing great innovation, great products, and far outside of burgers and sausages. Have I disappeared again? Because everyone seems to have frozen. Oh, okay.
Thank you.
I think you and I.
No, it's okay now. It's okay now.
So one last point I would make, and this kind of comes back to the conversation we had about co-men. We were so sort of frustrated with the lack of contract manufacturing availability in North America, for example, that we actually set aside and built a team specifically focused on solving that problem, i.e. spinning up a large contract manufacturing facility specifically focused on plant-based, because there's such a disconnect between the demand out there and the supply. And the funny thing is, when I talk about that sort of project on our side to build the right team, bring the funding together and set up a production facility, co-man production facility in plant-based, I get people from Italy, France, different Asian countries, all of whom saying, we want to do the same thing. You know, we need the same thing. We want to do the same thing. We'll invest. Like, there is such a shortage of production capacity in the plant-based space right now. And there just needs to be people stepping into that kind of vacuum. I think that's the one piece of a surprising piece you were asking for at the beginning, which is, you know, we all need to come together and sort of bring that infrastructural immaturity up a few levels, so that we can actually deliver on the promise of a lot of the great companies coming through right now.
Andrew, thank you.
I would just add,
yeah,
Andrew,
Allyson, go ahead,
just
please.
one point. You know, I think you're spot on, and I think part of the challenge has been that infrastructure isn't, you know, sexy. People haven't wanted to invest in infrastructure; they've wanted to invest in the technology, right? And so now we've got this huge bottleneck that we need to address. So it's great to hear that, you know, the work that you're doing and that you're building these kinds of facilities. We've been doing similar things, maybe less on the co-man side, though we are, you know, doing some things in that area. But one of the things we recently announced, also in Singapore, I think there's a lot of investment happening over there, was a JV with Temasek, where we are actually opening a precision fermentation facility that these startup organizations can use or toll and can leverage, so that they can bring their products to life more quickly and accelerate through that commercialization cycle more quickly. So I think infrastructure is going to be key, and there's a need to invest across the globe, because we can't have isolated areas of investment. We need to have that local capability on the ground. And it's nice to hear that some of the investment community is starting to open their eyes to that and continue also, you know, contribute to that success, because I think it's necessary as an unlock.
Clear. So Allyson, as you said, and Andrew pointed out, these synergies are very much needed, and obviously, and this takes time. My question to you know, listening to you, all of you carefully, what we see in some of the industries, particularly what COVID-19 prompted, you know, was shortening supply chain, localizing, nearshoring. Then you say, Andrew, you need, you know, you almost needed like to specialize because you couldn't find the contract to manufacture certain products. So there is a demand, and then you have to do it yourself. It's like almost, you know, not being able to do your property management. You cannot outsource it, then you have to do it yourself. So we are at the beginning, obviously. Does that mean that? But then on the other side, these products should obviously have enough margin and room to make those investments. The question is, do you have to can you then do you have to localize also the production, be close to the market given the logistics issues, etc., or you can use existing infrastructure that ADM has or somebody like that and then make those synergies? I.e., do we need to now to see the wave of investments in the distribution and production infrastructure, or we can use something which is already available, talking from efficiency, profitability point of view, but also environment point of view?
I think we are going to certainly look at the existing infrastructure, the existing distribution, production, and so on, and see what we can do to make it work. I think that the point I'm seeing, though, is that there are a lot of sort of medium-sized companies in the all protein space who are sort of getting great valuations, who are going out and raising $20, $30, $40 million with a view to setting up their own production facilities. And then a couple of things are happening. One, they build a facility that has an enormous capability, and then there's a disconnect between the current demand for that single product or that single set of SKUs and the production that's being made. And what's happening is, instead of their budget being allocated to marketing and driving the product in the marketplace, it's being used to cover the costs of a production facility that's at 40% or 50% capacity. And instead of building the brand as they need to and the product that they need to in all of the different markets, the distribution, all those wonderful things, they're feeding a CapEx open mouth and not able to drive the demand for their own product. And some of that is about not wanting the hassle of working with contract manufacturers. And this is something that small and medium-sized companies want to get away from, not realizing that the companies of the Tysons of the world have 50 and 100 plus co-man relationships around the world, helping them to produce many different great products. So, even the large food corporates have a very complex system of contract manufacturing. They haven't moved away from that requirement and have centralized their own production. So, and there's also a bit of ego in there as well, where companies that didn't exist 3 years ago suddenly have access to what they think of as unlimited capital, and they're like, hey, we'll go build our own factory. Isn't that wonderful? We'll wear our own t-shirt, and we're going to be completely verticalized, not realizing that they actually probably don't want to be in the in the production business if they can help it. It's a tough business, and it's very different from what they're used to doing. It's a complete distraction. I would have them all focus on building great products and finding the right partners to bring those products to market from an ingredient and a production perspective.
And I think you raise a couple of very important points, Andrew. And what I see, a lot of it resonates from the client work that we do as well, right? A couple of nuances maybe. A lot of these brands, more than the ego and of course the money, right, also believe that they have a secret sauce or an IP that is so important not to go out to the contract manufacturer, versus often we also tell them that, look, even if you look at the traditional food business, 70 to 80% of new innovations come from contract manufacturing. Kraft Heinz is not putting a brand new plant to build a completely different version of ketchup. They would experiment with the contract manufacturer until it becomes a scale where you could sustain, you would start making it. Until then, you are just buying it, right? Because that cuts short of significant time in understanding the processing, fine-tuning the operating efficiencies, getting to that from 40 to 60, 70, 80% scale, right? So that your cost of operations are optimized. I think takes a bit of a non-startup or non-entrepreneurial route, and also understanding that, yes, your IP is important, but the contract manufacturers in this day and age are very well equipped, right? Not to, and it is also in their interest not to just start mimicking what you are coming up with, versus creating this slightly or in many cases a much faster route to market, whilst relying on their technology, their infrastructure, and their processing capability and their efficiencies to try and go to the market with an efficient product at the right cost price, versus struggle down the CapEx big black hole, as you also kind of were describing, right? And doing it on their own. Because the capabilities, again, startups have not really been traditionally good operators, from the sense that they have a product or an idea or a technology that really is unique. But from a production processing, converting that into a commercially sellable product typically needs that layer in between, or an ecosystem that allows you to take that idea into the consumer value proposition.
Thank you, Chirag. So one of the topics before we certainly will encourage M&A, and please, for all the participants, we started receiving some of the questions, and also mindful of time. One thing that was maybe still not crystal clear, Chirag, you mentioned the rationale for people, consuming those products. Obviously, health was very much prominent. There was environment, then animal welfare. I'm trying to memorize. And then religious, I think, was at the bottom of your presentation. So what I'm curious, and obviously a lot of investments, startup and venture capital funds have been driven by those sort of positive environmental causes. But then on the other side, we hear also some conflicting views saying, hey guys, are you transparent enough when it comes to emissions? Is that really so cozy and rosy and nice, etc.? So maybe from each of you are coming from different perspective. I certainly, intuitively, we all believe it's net better for all the creatures, entire planet, for all of us, for mankind. But maybe just in short, from your point of view, because that's important. That's important for all product owners, for consumers, for you guys, for investors. So yeah, that maybe just a short intervention on that, and then we move to M&A part. Q&A, sorry. I'm talking about M&A too much, Allyson. Chirag, do you want to?
Always on our mind.
Yep. So for me, I would put 2 or 3 key interventions. And I think you guys have heard most of them already. First and foremost, understanding the consumer need and insights and designing or aligning your products around that, right? You see most successful companies in this space have really either created a need space or really understood that need space. Am I a sustainability focused alt milk player? And hence my product is going to, and product and the whole ecosystem is going to be geared towards that. Or am I somebody who is giving the flexitarian the option at the cheapest price, right, to make a plant-based protein? Because the mindset and the whole end-to-end value chain would look very different in those cases. So having that clarity is very important. Second, as I was also alluding, right, playing in the right ecosystem, may it be the contract manufacturer, the ingredient provider, the R&D support, etc., right, is a lot more important than doing everything by yourself, right? So find those right partnerships to get to the market faster. And as you do those two things, right, have a clear understanding of your expansion, because especially in the Eastern European context, you are going to go from one market to the other much faster than you would in the US or in the UK, right? So as you're designing, as you're creating that ecosystem, right, don't be super solo focused on solo market and then end up 2-3 years down the line having to reinvent the wheel again as you go into the neighboring country and further down the road, right? So have a bit of a platform mindset, right, versus a bit of an approach of I'm going to develop something for one market, scale it, and then I'm going to go to the other market, right? So those would be my top 3 in how I would kind of crack it at scale, especially in an emerging market.
Thank you, Chirag. And you, Allyson?
I just add a little bit on top of that. I mean, I don't disagree at all with what was shared, but I think it's important that you not just stay in touch with consumer trends, but you understand the different market segments, right? Because what one wants in the UK is very different than what one wants in Poland. What one wants in Singapore is very different than what one wants in North America. Food is local, but it also just, culture is so embedded in food and how we engage food, even to, what you were highlighting, Miljan, around what are the key drivers? Yeah, I mean, we talked about health and taste and sustainability, but one of the major drivers in APAC is also food safety, right? Making sure that their food is made in some place that they can have confidence and feel good and safe about what they're consuming. So there really are unique drivers, and we need to bring the ability to provide differentiated offerings to each of the markets in their locally meaningful ways. So I just wanted to highlight that. On top of that, I would say scalability and adaptability and price is key for all the technologies, for all the solutions, for anything we want to bring to the market in this space. We will not be successful unless we address all 3 of those. And they are interlinked, of course, but they are key to the success. And I think ADM is trying to complement others' capabilities, whether it's on innovation or on scale or on go-to-market know-how and expansion, reach and investment. So I think that we are in a strong position to support all of those, whether it's for our own innovations or for partner innovations. And so I just encourage and echo some of the things that have already been said. Collaboration, partnership, and ecosystem is really how we will get there faster and do it in a way that is meaningful, relevant to the customers.
Thank you very much for the answers and interventions. I'm looking now in our chat. I know this is, probably, more than $1 million question. We touched upon that at the beginning in terms of the size, in terms of the growth rates. But now we heard also what are the challenges to overcome. The question is, what is your guess for 2030 and 2040 on the market share of animal versus alternative protein? Chirag, do you want to have to start?
Yeah, I already started answering. I think between 20 and 30%. So on my slide, the medium case scenario, I am at the same time very optimistic that the regulatory and other interventions will happen and take it high.
Do you, from the guys from the industry and finance, do you agree with that? Having heard you on the challenges and everything.
I think that's really aggressive for 2030. I think it's absolutely achievable, but I think it will take a little bit more time, just given some of the constraints that we will face to be able to meet that demand. It's a pretty significant demand and increase from where we are today. And so it's given the commercialization, what it takes to commercialize new technology. I just think it's going to take a little more time. We've got to expand the plant-based, we've got to fuel the fermentation capability and assets and infrastructure, and then we've got to prepare that cell base for acceptance and regulatory adoption, right? So it's there's still some key unlocks to make that happen, but I think it's doable. Just need a little more time.
And
yes, I was going to say, from my point of view, the gap between the traditional foods or the foods we've eaten traditionally, so pork, beef, fish, dairy, all those sorts of things, so meat, seafood, dairy in particular, the gap between delivering on taste, texture, and all of the kind of key olfactory kind of requirements from an alternative perspective is minimizing on a daily basis. So our ability, and this is why I don't think of this as a trend or not a trend, because we around the world have been eating meat, seafood, and dairy for hundreds of years. And now we have the capability of producing exactly the same food, or we're getting closer and closer to it anyway, exactly the same food in more sustainable and planet-friendly ways. So it's not a factor of will people eat it because they've been eating it for hundreds of years. It's a factor of how do we produce it? And I think we can produce it, and we're getting closer and closer to producing it using cell-based, fermentation-enabled, and plant-based. The question then becomes for 2030, those meat, seafood, dairy industries combined are a multi-trillion-dollar, I think it's about $1.5 to $2 trillion across meat, seafood, and dairy globally. So it's not so much a matter of, can we produce it? I think we're getting better and better. More, the magicians are out there creating these things on a daily basis. It's a matter of, can we produce the sheer volume to be 30% of a multi-trillion-dollar market? It's a production piece. The one thing that scares me, and I don't know we've necessarily touched on this, although we have done peripherally, is we're relying at the moment on about 3 crops. So it's soy, pea protein, and wheat are the dominant sort of crops in this category. And that's a little bit scary when you think about, from a plant-based perspective, being so reliant globally on a small handful of sources. Now, I do see us moving into chickpea and lupins and various other sources in local markets like India and other places, but I still see a sort of global reliance on a very small number of ingredients. So from a plant-based perspective, and I don't think that's the complete picture, I do think cell-based and fermentation-enabled will be a significant percentage of that 2030 number. But from a plant-based perspective, I hope we find a way to leverage other sources of ingredient to provide these products.
Thank you very much, Andrew. Igor, anything to reflect at the end?
No, I just wanted to say that, of course, I'm hoping that 2030, this 20-30% will be available for us, will be achievable. and we do our best to achieve that. So from a Bezmiesny perspective, we are cheering for it. We'll keeping our fingers crossed that that globally the percentage will be as high as it was mentioned in the question.
We hope so. First of all, I think we are closing to and approaching our time slot. First of all, at least to me, and I'm sure to many of us, we are still the bankers. It's always learning, and it was, for me, was excellent educational exercise, and really more than interesting to hearing you from the field, from the industry, at the first-hand experiencing the challenges, etc. Certainly huge potential, which we all knew, but with a lot of challenges ahead. But as you said, Andrew, we've been eating those kind of food for years. Now we just have to find a way to unlock. Creativity is not lacking, innovation is not lacking, capital is not lacking. I'm sure those scalability, production, and infrastructure will be resolved gradually by raising the awareness also, and how to engage the ecosystem and remove those egos, and that we all have to work together on this and still make it sustainable, make it palatable for consumers, make it for industry players profitable. That's always goes hand in hand, but really in a sustainable way. Certainly we as an institution, we would like also to play a role, which I think we will, and with all of you, like hopefully as a partners in on the policy and on investments front. And I really do believe personally that once circumstances permit, that we also meet in person and we cooperate in many of countries that we overlap. On that end, I would like really to thank you all for your intervention. First of all, to your precious time. This is the resource that is never, it's not reversible. And I wish you all the best in your plans, first of all, and I wish you all the best for the coming holidays, and hope to see you and meet you soon, and hopefully, try and invest and try of those products somewhere together in the near future.